In today's video, I'm going to be talking about two new stocks I invested, one for my general portfolio and one for our Wealthsimple Small Cap Trade Challenge portfolio. Hey, you wonderful people out there, Chris here from the Business Report Show. Hope you're having a great weekend. Before I begin, make sure you hit that subscribe button, and if you do enjoy the video, make sure to hit that like button. Every little bit helps. As a disclaimer, I'm not a financial planner or advisor, and everything I say on this video is just my opinion, and for education purposes only. Make sure to seek a professional before investing. If you haven't seen my collab video with Kyle Team Ev, I'll put the link up here. Make sure to go check it out. I collaborated on a video talking about hockey and stocks on Thursday, and we made a wager on the Winnipeg Jets versus Edmonton Oilers game, and it looks like my Oilers came out on top on Thursday. Now, I am recording this video right before the Edmonton Oilers and Winnipeg Jets game on Saturday, so the outcome of that game may be a little bit different, but the deal was that Kyle would wear an Oilers shirt on his next video, so make sure to check out his channel for his next video where he should be donning the Oilers shirt. Looks like there was some red across the markets this week as short-term investors were taking a bit of profit from the previous trading sessions, and some investors repositioned in preparation for the Federal Reserve's policy announcement that happened on Wednesday. With equity investors, the concern has been the continued rise in treasury yields as a potential sign that inflation may drive the Feds to increase rates. If this happens, you can expect a similar red day for trading sessions to come, especially in the growth stocks, as any increases in interest rates may affect their balance sheets negatively. For me personally, this week was flat as my growth stocks did take a hit, but my value stocks gained. This is a good reminder, the importance of proper diversification and asset allocation. I'll put a link up here for my video about that. Okay, so I added two stocks to my portfolio this week, one to my general portfolio and one for our Wealthsimple Small Cap Trade Challenge. For my general portfolio, I added Power Corporation, ticker symbol POW, on the Toronto Stock Exchange. Power Corporation is a very old financial institution in Canada that started back in 1925, and the majority of shares were subsequently bought out by the prominent Desmarais family in 1968. Since then, Power Corporation has grown into an international management and holding company that focuses on financial services in North America, Europe, and Asia. Its core holdings are leading insurance, retirement, wealth management, and investment businesses, including a portfolio of alternative asset investment platforms. For many Canadians, you will recognize the various financial companies they own, including Great-West Lifeco, Investors Group, and none other than the platform that we're doing our Small Cap Trade Challenge, Wealthsimple. Power Corporation is currently trading near its 52-week high, but a PE ratio slightly under the S&P TSX average and a dividend yield of approximately 5.5%. It's actually not a bad blue chip to consider for your long-term holdings. It's worth noting that management did file with the securities regulators last month with their intent to repurchase up to 5.5% of public shares for cancellation. This is typically seen as a positive sign, as canceling the shares would drive down the PE ratio and shows that management feels shares are currently undervalued. I expect the price to go down in the near future from my entry price of $32.40 and would look to add to my holdings on the dips. But overall, I see this as a long-term play, especially with their diverse financial holdings and their willingness to explore investments into the fintech world. Financials are strong with Power Corp, with the current trailing 12 months free cash flow expected to come in at $9.5 billion. For a Wealthsimple Small Cap Trade Challenge portfolio, I added the company CPRO, ticker symbol CZO. CPRO is a Canadian biotechnology company involved in the development and commercialization of active ingredients derived from oats and other renewable plant resources for healthcare and the cosmetic industry. Their unique product offering and claim to fame is their proprietary plant extraction-based manufacturing process to supply ingredients to well-known personal care and cosmetic brands such as Neutrogena, Burt's Bees, Dove, and The Body Shop. As more and more consumers demand brands to use less chemicals and more natural ingredients, companies like CPRO are well positioned with proven processes and systems to supply those big brands. What I like about CPRO's business is that they are also expanding into the functional foods market in developing products that are derived from food sources and have added health benefits. For example, their oat beta-glucan can be used in food products such as salad dressings to help lower cholesterol. I've been seeing more and more of these food products that aim to offer no-fat options or low-fat options with an added health benefit such as lowering cholesterol. Those additives are made by companies like CPRO, so I see a lot of long-term possibilities to what CPRO can produce to meet the ever-changing demands of consumers looking for healthier ingredients to the main food products. They are currently at the clinical stage for oat beta-glucan, So while their nutraceuticals are still in the trial phase, they are a revenue generating company from their cosmeceutical lines. First 9 months revenue of 2020 came in at 12.4 million compared to the prior 9 months. Q3 of 2020, they showed a net profit of just under $200,000 compared to a net loss of just over $100,000 in the same quarter a year before. Cash flow from operations in Q3 was 4.7 million with a positive working capital of over $8 million, meaning they have more than enough cash on hand to continue the research and development initiatives. Management expects to get back on track to double-digit pre-pandemic growth now that the economy is slowly opening back up. With the stock trading at about 60 cents per share, I think it's a good time to seriously consider this company. One thing I will say is trading volume is super light, so you may have to be a little bit flexible on your entry price, and the swings in the stock may scare some investors who are not used to trading penny stocks. But I think overall the long-term outlook for this company is well beyond 60 cents per share, as long as they can keep generating the sales and their nutraceuticals exit the clinical trial phases successfully. Well, that's it. Just a quick video of the 2 stocks I've added to the portfolio. Hope you are having fun with the Wealthsimple Small Cap Stock Portfolio Challenge. As mentioned before, super excited that I did the collab video with Kyle Team Ev on Thursday, so make sure to go check out that video. I'll put the link to his channel below. And don't forget, I want to hear from you about some stocks you've looked at for the week and stocks that you think we should look at to add to our portfolio in this challenge. Remember, I'm not a financial planner or investment advisor, so make sure you consult with a professional before investing. Don't forget to hit that subscribe button and the like button. Every little bit helps. Thank you for watching the Business Report Show. Remember to always be learning, always be investing. I'll catch you in the next video.